Okay, changing tracks then, let's touch base with Lakshmi Vilas Bank. We have P. Mukherjee, who is MD and CEO of Lakshmi Vilas Bank, joining us to discuss the stake sale on the cards, what they plan to do with their business going forward. Remember, the stock is up 18% in May, was the 4th best NSE small cap gainer over the month. Mr. Mukherjee, it's great to have you on the show. Let's start off with the news at hand. Media reports suggest that the bank is looking to sell about 26% stake. What could you tell us about this piece?
Well, yes, clearly we need to raise capital. So to that extent, definitely we would be going ahead. A lot of the news items going around are somewhat premature in nature because we need to complete the process, so to say. And yes, we definitely need to raise capital and we will be working for it.
Are you in the process of raising money? How much money are you looking to raise? Who are you looking to sell the stake off to? I would imagine it would be a combination of investors, maybe strategic and financial. How is this? What is the plan in terms of monetizing this 26%?
In the first place, I must say that there is no specific number in mind. So the 26% number is something that has come out in the media. We would certainly look to bring in quality investors. It could be one or more investors. We would engage with investment advisors who will work with us on the specific routes that we should adopt, the routes that we should take, and the amount and the number of investors that we will bring in. All I can say at this moment is that since the bank has gone through a period of great stress in terms of its book, and now that the book is relatively clean, this is an excellent time for us to raise growth capital and go ahead.
Going ahead with a right issue or a QIP, I mean, if you're so confident, I'm sure existing investors would be happy to bail you out, or would be happy to chip in if the right issue is attractively priced.
Well, as I said, we are planning to work with our investment advisor and see which is the right course to adopt. So, I am not going to open or close any doors really. We would look to all options and finally decide on whichever is the best option for us.
Need is not in order to meet RBI capital adequacy norms. This is pure growth capital which you require.
As I said somewhere else, I have reasonable comfort that incremental provisioning requirements would be largely met out of my recoveries this year. So, the capital that I would look to raise would primarily fund growth for us. Our growth has been stunted for the last couple of years. It's high time we were back on the path to growth.
For numbers, and where all banks were forced to take write-offs because of the new RBI policy, I'm sure your book value would have got eroded. So, as of 31st of March, no forward-looking statements here, as of 31st of March, what was your book value?
On an unadjusted basis, it is around 100.
Okay, so stock is trading at about 1 time book, fair point. Can you give me a sense of your fee-based activity at what?
That's correct.
So, can you give me a sense of your fee-based activity?
Our fee-based income has been, the contribution of fee-based income has been relatively low traditionally in the bank. It's been in the region of about 8% or so, and that is where we find tremendous opportunity to boost revenues. So, that activity is growing substantially now that the focus has been brought to bear on transaction banking to bring in remittances and LCs and guarantees, as well as on the retail side increased focus on sale of third party products. So, my sense is fee-based income contribution to the bank's revenues will rise substantially going forward.
Purely as per a value proposition that you would bring on the table, and I'm just working on this as simply as based on your market cap, which is about 2,500 crores, 26% would be about 650 crores odd. Is that roughly the range of the kind of money that you would be looking at, between 600 to 1,000 crores? Is that your requirement?
I wouldn't like to put a number right now before you. As I said, This is something that I would like to discuss with potential investors. It's my job to put forward before them the sort of plans we have not only for this year, but for the next few years. You might be aware that the bank has in fact internally put out a Vision 2026. So, we do have some clarity on where we wish to go eventually. And so, to that extent, if I am able to excite my investors, I might be able to get in a lot of money. I really don't wish to put a number right now out there.
Where are we in the process of this fundraising? Because news reports are indicating that initial talks have happened with Singapore DBS, talks have happened with True North, Carlyle, Blackstone, the Tata Group, Birlas for a potential deal. Are talks at an advanced stage?
I don't wish to name any names, but I must tell you that I have indeed engaged with a lot of potential investors, many who have been named in the report and many who have not been named in the report, but these are still relatively early days. At the same time, my sense is the capital, and if it were to come in tranches, the first lot should be in rather quickly.
3 months is quick?
I would be delighted, but frankly in these matters 3 months might be a bit too quick.
You know, we are really trying to grapple over here to understand your capital needs. I know you are saying we need growth capital, we need a lot of capital because we have a vision of another 8 years ahead for ourselves. But from a market standpoint, sir, it would be very interesting to understand what will fuel, what kind of capital will fuel your growth from here. You are looking at gross NPAs of close to about 10%, net NPAs of about 5.5%, your provision cover is at 55%, advances grown, which is the core growth of the portfolio on the loan book side is about 8.5%. Give us some color at least on a broad range of, in tranches, how much would you be looking to raise? What works for you?
Let me first of all point out to you that as far as the NPLs are concerned, clearly I am not going to be sitting there. We are working to reduce the NPLs through recoveries too. It is not as if we are waiting for new capital to come in for us to recover from our stressed book. A lot of this will probably be recoverable. It is my hope and sense that this year itself we should be bringing down the gross NPL ratio by around say 200 basis points. Now, that is one aspect that we will keep in mind. Now, as far as the exact growth capital that we will try to acquire, that will partly be a function of the structure of capital to be raised. So, it is too premature for me to exactly put in a number. Left to myself, I mean, I would be delighted if I were to raise at one go somewhere in the region of maybe say 1500 crore rupees. That would give us a lot of breathing space to run. But that is something that we would look to decide in due course. I do not think this is something that the board itself has got a specific finger on yet.
You all the best. You definitely are committed to ensuring that the business is back on track, at least in terms of asset quality, that you trim down the stress on the book, and we wish you the very best in the process of raising this growth capital that you have indicated. 1500 crores is roughly the ballpark range that you are aiming at.
Thank you very much indeed. Thank you.